Today I'm going to go through how to use leverage stocks to maximize your returns by Granite shares. Hi, this is Mosh and I'm an amateur trader and investor. This is a solution-based channel and anything I learn, I teach you guys. Granite Shares is a provider of leverage stocks which can be also found on Trading 212. Leverage is borrowed funds to amplify your returns. Don't worry too much about that. All you need to know is this is the way you amplify your returns if you don't have that much funds or that much money to play with in the stock market. Now, before I start, I done a video just over a month ago where I bought £5,600 worth of Royce. I think Royce is a great recovery stock. I done a whole video on this and I'll link it up at the top and in the description so you can give that a watch. In the comments, one of my subscribers called Liam, big shout out, he said, if you're so bullish on it, why don't you buy 3x leverage stock by Granite Shares? Because that would, in a sense, magnify my returns. So this is where I started looking into it and I'm gonna go through everything that you need to know about Granite Shares and how it works in this video. Before I start, I'm not a financial advisor. Using leverage is probably one of the riskiest strategies available because you can lose it all. It can magnify your returns, but it can also magnify your losses. So just be very careful when using leveraged products. I've always been high risk, high reward. Since last year, I've been trying to maximize the returns on my account. I started from £500 and I'm in the 5-figure mark at the moment. So the first thing we need to do is go onto the Granite Shares website and see what they offer. Now, once you're on the website, it's called ETPs. ETPs basically just mean exchange traded products. Once we're on there, you can see they've got a lot of good companies. For example, Amazon stock is really expensive. If you're not dealing with hundreds of thousands or millions of pounds, then it's going to be very hard for you to make money off Amazon stock unless you buy a leveraged product where the leverage factor is 3x. And I'll explain what that means. So if I scroll down, you can see there's Facebook, there's the FANG products, there's Apple, AstraZeneca. We're looking for Royce because that's what I'm invested in. I'm actually invested in Neo as well, but that's probably for another video. All right, so the ticker is 3LRR. The leverage factor is 3x and it's the ETP. You can also go short if I scroll down, but I would avoid shorting any products. For me, unless you're a very experienced trader, avoid going short. All right, so let's click on Royce and bring up a bit more information about this. All right, so it gives a product description, and this is the important thing. This is the leverage factor. So for example, the Royce stock, if it goes up 1%, your Granite Shares stock goes up 3% because it's always times by 3. So if Royce, the actual stock, goes up 10%, your Granite Shares leverage stock goes up 30%. This is how you maximize your returns. It works the other way as well. If Royce is down 10%, you're down 30%. The good thing about Granite Shares is you cannot lose more than you've invested. So if you put £1,000 in, that's the maximum you can ever lose. You can't lose any more than that. And another really good thing is you can buy Granite Shares in the ISA accounts. All right, the first thing we need to look at is the fact sheet. So if it's not Royce, if it's something else like Neo or Amazon that you're buying from Granite Shares, the first thing you need to look at is the fact sheet. All right, so this is a fact sheet. It gives you key features. If we quickly go through that, this is just explaining how the leverage factor works. So simple trade, no need to borrow or short stocks. You magnify returns in a single trade. You can't lose more than the amount invested. That's really important to understand. The next key thing that you need to look at is this bit, the total ongoing cost. When you buy Granite Shares for Royce, it's going to charge me 0.0136% of the amount I have invested. I'm going to break that down by looking at another document. The next key document you need to look at is a key information document called the KID. Okay, so if I download that, all right, so it gives you a bit more information about the product and it gives you, it's a very high risk. Anything that's a leverage product is going to be a high risk. This is the important part. It gives you an idea of the cost. So they give you a performance scenario based on £10,000 invested. So the stress scenario, like the worst case scenario, is minus 74%. So what you'll be left with after your cost is £2,523. Unfavorable situation, if it's down almost if it's down 4.6%, you're left with £9,500. Okay, the moderate situation where it's down 0.69%, you're left with 9,929%. And the favorable situation, 2.5%. So you're left with £10,257. So you made a bit of profit. Now that's just an illustration. And I'm going to show you my actual Trading 212 account and what that is looking like for the Granite shares leverage stock on Rolls Royce. So just make sure you keep watching till the end. All right. This is cost over time. Now on the actual KID document, the key information document, they say you should really be holding it for only 1 day. These products are designed to be held for 1 day. I'm actually planning to hold it for 1 year and I'll explain why. So currently the cost is 0.0136%. So £10,000 at 0.0136% is £1.36 per day that you hold this product. Now, I'm going to come back to the fees because it does get a bit complicated if you're planning to hold it for more than 1 day like I am. I'm planning to hold it for up to 1 year. I'll give you all the numbers and what those look like towards the end. But before we do that, let's jump into my Trading 212 portfolio. I've already got it up. You can see I have 658,780 shares of the Granite shares Rolls Royce 3x long with a ticker 3LRR. It has been doing very well. It's been climbing and climbing. So you can see my average price was 0.803 pence and it's currently at 0.91. So I'm up 14.49% or a profit of £766. I did sell some out last week just to get some cash out my account. Now, my target, as I said, I'm holding it up to 1 year. My target for this is 1.70 and I'll explain why. So if we open up the chart, you can see this is currently where we are at 0.923 and I bought it at 0.803. That's my average price. If I get the candlestick chart out, remember this goes along with the Rolls Royce price. So if I put in Rolls Royce here, and we get a candlestick, you can see they're very, very similar. So if the Rolls Royce stock price goes up, the Granite share stock price goes up. If Rolls Royce goes down, they go down as well. That's why the chart looks almost the same. Now, my target price is £1.70. And I'm going to explain why it's £1.70. I did do a thorough analysis in my why I'm buying Rolls Royce video, but I'll do a quick one now. So I'm just going to move it slightly up. Yeah, it's roughly there. For me, this is getting close to breaking this resistance level. My thoughts is going to break this resistance level and keep going up. They actually had a really good earnings this month. They made some profit, obviously, after the pandemic and the situation that they were in. Now, for me, the second resistance level is up here around the 1.70 mark. And if we go to the Rolls Royce stock, that would be around the 128 mark. £1.28 mark. So I'm very confident within the year, especially with the recovery of airlines, air travel, defense and all that sort of stuff, that it will break this current resistance level that is very close to breaking. And then the second resistance level is going to try to break. Whether it does or doesn't, it doesn't matter to me because my sell price is 1.70. So once it hits that target, I'm out. How much profit will I make if it hits £1.70? So I have 658,780 shares. Times that by 1.70, that gives me £11,199, giving me a profit of £5,909, which is a lot of profit. This is excluding the fees. I'm going to come to the fees in a sec. If we go back to the start, we know the fees is 0.0136% every single day. So let's say you had £10,000 invested and that stock price stayed on £10,000 for the whole year for 365 days. You would have paid £496 in fees. Because this is a daily ongoing cost. So for example, I bought £5,290. Now that price changes per day based on how Rolls Royce is doing. So the simplest way for me to work this out was my profit target is 1.70, which gives me a profit of 11,199. My initial buying price was 5,290. The average price is £8,244. So what I've done is I've used my average price times the percentage of 0.0136%. That gives me an average daily cost of £1.12 every single day. Now, if I times that by 365 days, one full year, that gives me a total cost of £409. So my profit that I'm aiming for is £5,909. If I minus the fee of £409, that still leaves me a profit of £5,500. I would not be making that amount just by buying the Rolls-Royce stock in itself. I would need a vast amount of money to make that much profit. So for me, it still works out. And I'm very, very confident definitely by next year, it will hit that resistance level at 1.70 on the Granite shares. And like I said before, you have to be very, very careful with leverage stocks. If not used it before, I would say avoid using it. And I would always recommend putting a stop loss in place. So if it does not go your way, you have a maximum loss you're willing to take. Otherwise, you could lose vast amounts of money. And remember, this is available on Trading 212. And if you want a free share worth up to £100 with Trading 212 or free trade, you can go with them both. All you have to do is open up an account using my link in the box below. Open up an account, deposit £1, and you'll get an absolutely free share worth up to £100. I hope you enjoyed this video. I'll appreciate a like and a sub. See you guys again soon.